nothing can ever stop this train, right? That it's just going to keep going up and up. And, it's just like this said, this long-standing belief that real estate prices can just never go down. All they can do is ever go up. But the reality of that situation is breaking when you see that even the presidents of Redfin and Zillow are going on live television and doing interviews saying that the home prices are, coming down substantially. Uh, some prices coming down even around 10% or so, and some are even underwater. And that should be a scary fact because everybody seems to think this is just the greatest economy ever. This economy is so hot right now, and while there is a lot of wealth in this country, it's certainly not at the bottom right now. Most of it is all at the top, and it's all being concentrated at several high-end AI companies, specifically NVIDIA. So it is true that basically the fate of this country and the economy hinges on the success of NVIDIA. I don't want to take anything away from that. I do own a good amount of stock in NVIDIA, as well as the Fortune 500, the Dow, and these are the things that you need to be invested in if you want to be making it. We got a soggy bottom. All right. So the fact of the matter is that the presidents of Redfin and the presidents of Zillow, their whole business model revolves around convincing people that prices will just continue to go up. That's the business they're in. So when they go on television and start telling people that prices are actually going down, that actually shows that their whole narrative is, cracky. And with that, comes the eventual downfall of a lot of the business ideas that this country is being held together by. And when this happens, when trust erodes, and once confidence is gone, the psychology flips really fast, because there's not much you can do in that situation. And this bubble is really bigger than 2008, and I don't mean that a lot of subprime loans were put out to people, who can't afford it. No, it's not that. But the difference is that, it's different than 2008 in that it's not being strained by all of these subprime mortgages that, tank the economy. What the bubble is being fueled by right now, and make no mistake, it is a bubble, okay, because it's being fueled by all the ultra low interest rates that fueled this, frenzy. I'm part of it too. Don't make no mistake. I bought my house in 2019, 2020, right towards the end, and I'm very happy I did. Let me just say that. I'm not here to, I'm not here to gloat. I'm not here to tell you what to do. I'm just telling you my side of the story. Everyone's story is different, right? The market was flooded with pandemic stimulus, which made a lot of easy access to capital, lots of speculative buying that was in the Airbnb market. Everybody thought, right, they were just going to arbitrage, and everybody was just going to become a ultra big Airbnb host, right, and just buy one apartment after the next, and then suddenly everybody stopped booking. Speculative buying. Everybody then started, of course, also buying second properties, and also the FOMO pricing, thinking that you need to buy now, otherwise you're going to be priced out forever. And that's really what fueled a lot of this. And the idea was that if you don't buy now or buy anything now, you're going to be priced out forever. And we were already kind of being told it's already unaffordable, so why not just get it now? And that's kind of what happened. It just, everybody flooded in, and everybody was just buying sight unseen for things we had. It was basically everybody wanted to, right? That we all saw that scene. Buy an apple, right? What's this? And of course, the price is detached from what wages we're actually bringing in. I know we all know that prices are not being, um, you know, held locally. Some cool little workout machines here. I love this area. You can come here, take a walk, do some workouts. You know, each area has its own station. You can get your mind right. You know, this beautiful day reminds me of that line from the 50 Cent album, "Get Rich or Die Trying." That sunny weather wouldn't mean nothing if it wasn't for rain. And believe me, we just had a hell of a lot of rain, so wanted to get out here and just enjoy this beauty. The other sad part is really affordability has imploded, with the dollar just quietly more and more eroding, and people just yelling, you know, at culture, politics, and not being able to see the you know, the trees from the forest. It's really been, you know, hurting the average consumer. Mortgage payments are currently at rates that are just dramatically higher than just a few years ago, right at around 6% or so. And that's, you know, hurts everybody, now making, you know, people's buying power even less. And the main thing is, a lot of that is buyers just didn't disappear, you know, because they didn't want to. They disappeared because they can't qualify. Again, the lack of buying power because of the rates increase. Home prices, insurances, property taxes, maintenance costs, right? These are things that we're just not keeping pace with. And it just keeps everybody stuck. The thing keeps, you know, getting higher and higher, and you're just being squeezed out. You know, even small price drops doesn't even matter, you know, if the payments still stay unaffordable, right? I mean, even if they drop the rates on mortgage, even if it's which will be negligible, you know, by the time they do, you know, drop rates significantly, it won't be enough. And a lot of people say actually the layoffs will continue to go into 2026, because a lot of companies said, I don't want the headache and the bad image of laying people off during the holidays. So yeah, I totally believe, as more and more reports indicate, that companies do plan to cut more jobs in 2026 in the beginning. And here's the real truth. Inventory is rising all over the place. Look at Florida, look at California, look at everywhere else. I mean, now the average house in America costs around $400,000. Home prices sit a lot longer before they actually get sold. And on top of that, as they sit longer, the more and more prices drop, because the owner chooses to want to get rid of the property because they are sitting longer. There's a new construction backlog that is forcing the companies to offer quiet discounts, buying down rates, because people are skittish about buying new homes. I'm sure you've seen lots of videos about the poor quality construction of new houses in today's you know, construction market. I mean, a real honest indicator is, you know, the rising amount of days that inventory is sitting on the market. That's a real indicator right there, right? When I remember the pandemic, you know, houses were sitting on the market for weeks, days, you know, very, very, not that often. It was months that they were sitting on, but you know, that was the case often. So I mean, that's a real indicator about what the people are going through, what they're doing, and what they're thinking about. Meanwhile, you know, the sellers are just pretending it's 2021 and that, and buyers already know it's not. So, I mean, of course, you know, the sellers want what they can't have. It's been that way since the dawn of time. Just go look at Facebook Marketplace. You'll see people who have an M2 Pro who want, you know, $900. So it's not even, you know, based in reality. It's kind of just what, you know, someone wants or thinks they deserve, right? Me. Pick me. The sad part is, a a lot of these price cuts aren't really becoming normalized. There's been just like a huge amount of price reductions, and not just in weak markets. A lot of these were, once considered, bulletproof areas. Your California, your San Leandro, San Francisco. Like I said, the sellers, they're finally starting to realize this. They're cutting prices multiple times. They're offering incentives, and they're pulling listings after they're realizing they're not selling, or they're not selling fast enough. These are kind of what are often described as kind of the canary in the coal mine kind of scenarios, because a lot of these are, coming in the signals that, the contract cancellations, buyers getting cold feet, appraisals are coming in a lot much lower than what people are expecting. Financing falls apart while either, while people are looking, or while going through escrow. And, this really creates a feedback loop that, failed deals, comps fail, and the future appraisals weaken. Like I said, investors are kind of the major culprits to the run-up to all of this, and are now, facing negative cash flow from all the rental properties that they're not getting, money back from. They're getting crushed from the insurance, or some places they're just getting their insurance canceled on. I'm sure you've seen a lot of videos in Florida about that. Now with all the supply of extra rentals and homes, and the just years of increasing rent, now we're seeing rents starting to fall. So now there's competition in the rental market. Now we're seeing a lot of the investors selling their portfolios to try and mitigate their losses, and that really just accelerates the downturn faster than the owner occupiers. So of course the media wants to say everything's fine, don't worry, we got this, we're good, you're Gucci, right? Mainstream media will never tell us the truth, because of course they're in business to get us to just keep watching the stream, keep viewing the ads, keep buying the slop, and just believing the lies. They all keep telling us, oh, we're in for a soft landing, everything's gonna be good. This is just a healthy correction. It's a seasonal slowdown, I mean, a lot of times this language is often used to delay panic, right? They did the same thing in 2006 when everybody was trying to warn the market of what was happening to come in 2008. Everybody said, no, this is crazy. Prices are only going to go up. There's no truth or validity to any of this, So keep that in mind. Like I said, if you don't remember your history or learn from it, you're doomed to repeat it. The media doesn't call fire until the smoke alarm breaks. And I want to just say to all those people who want to say, "Oh, Mike, you're just a doomer. You're just a gloomer. Why you gotta be so sad? Why you always lying? Why you always lying?" And that's not the case, Dude, no. Come on. My dog, sorry. But here's the thing. This isn't the bottom. This is early times, okay? I mean, things don't collapse. The cracks start early, right? Prices just don't collapse overnight. Downturns don't happen in surges, right? There's always early stages, right? There's always early cracks in the foundation. There's flat prices, and then there's price cuts, then stalled sales, forced sellers. And, I think today should be kind of more looked at as a transition from denial to acceptance, because if we're not gonna, be honest, then, hey, you got some work to do. In this day and age, you got to be able to look at yourself in the mirror and be able to talk truth to yourself instead of be able to be fed lies, just Just look at what you guys ate up over at America Fest with Nicki Minaj, right? Now, I mean, I'll play that clip, right? With she was totally going stumping for Bill Clinton and Obama, saying that these men needed the women in their life, and don't get fucked up, and don't don't be a Melania. Don't treat your man like a Melania or something, right? So just fun, that, like I said, you can't see the trees from the forest. Everyone's grifting, everyone's selling you something. Everybody wants you to be their ad revenue. Everybody wants you to focus on them, to pick me, to watch my stream, to subscribe to me, to like my video. I'm just here to tell you my thoughts, But yeah, like I said, here's the facts. The average person is not going to be able to afford their own home without having their family or some investment angel come in, swoop in, and give them $20,000, $30,000, $40,000 to help them with the down payment. And that's not even a down payment anymore. That's just like an FHA loan, because, like I said, here in California, my starter home is considered, starter home, just under 1,600 square feet, right? Three bathroom, 2.5 bath, is at the top, is this year it topped 785,000, and with like I said, what we're seeing in the market right now, it now is $710,000. That's a 10% drop already. I guarantee you it's going to drop more. Luckily, we're not underwater, so just wanted to jump on here, let you guys know, there might actually be a chance in the near future, but you guys need to be ready for it, and you can't let others tell you what to do or what to think. All you can do is just do your own research and not allow others to make, your opinions your own. But that's all I got for you guys today. Hope you had a great Christmas. Hope you guys have a safe New Year's. And Bosco and I will talk to you soon.